Hello and welcome to another update video about Natgas as we're heading into the weekend and heading towards a new year. The situation hasn't really changed, so it's only going to be a short update. The idea is still that the price ideally gets another low in this structure. This additional low could, however, be really a lasting low and a long-term low. A substantial low, you could say, that will then send the price in a significant rally higher, basically to new highs that could even shoot basically here the highs back in September last year and before. I mean, this is the futures chart, so I don't have not the entire history on this chart, but yeah, it would be a so-called third wave rally. Basically, this is a wave 2 pullback. And the next rally would be a third wave, which can be very, very aggressive. The idea is that we are in this fifth wave to the downside, which is the last wave of a cycle. So it would, if I had the lifetime chart, this would be wave 5 of C of 2. And the third wave would start next. And if you are aware of the different Elliott wave patterns, structures, and types of waves, then you know that a third wave is typically the most aggressive one. So watching for that, obviously, but before that happens, one more low cannot be ruled out. It is sort of my primary scenario at the moment. With every scenario comes a level that would lead to invalidation, or at least make the current working scenario, which is the one that you see on the chart basically, make this one less likely. And that level is at $2.92. So if the price gets a sustained break above $2.92, it would suggest that something more bullish, more directly bullish is going on. Yeah. At the moment, this looks like a bear flag, and we had a pretty impulsive sell-off in this third wave within the fifth wave. And now you see all this corrective looking, overlapping price structure as the price climbs a little higher, slowly though. And this is very characteristic for such a bearish flag, or generally for a fourth wave correction, because this would be wave 4, a corrective rally. Wouldn't even call it a rally, which ideally then would see the price go lower over the coming weeks. In January, maybe February. Such a wave 4 can be very boring. It started a few weeks ago, and it's characterized by these overlapping waves. The idea is that we might get just one more high, maybe a couple of highs, but as long as the price stays below $2.92, downside pressure should remain high. Within this red box, we can overlap the subwave structure targets. Basically what I can do, I can take the length of the A wave, compare it with the length of the C wave, and that gives me a target range for wave C between $2.63 and $2.87. And that's sort of what I'm watching here for at the moment as a potential target range. Could get one more high, maybe even a couple, as I said. I just don't want to see a break above $2.92. Well, I have no problem with that, but it just would mean I would have to assume that a lasting low already has been established. Whereas in my primary count, it basically would be, it's expected to get one more low. And as soon as we see a break out of this corrective price channel to the downside, followed by a break below these previous swing lows, step by step, I think we can start to confirm that wave 5 is in the making. Key levels here are especially the wave 2 low, which is at $2.31. The B wave low at $2.29, and then obviously confirmation is at $2.19. When that level breaks, we are in wave 5. And yesterday I added here some possible targets. They are moving targets. They will be specified further once we have wave 5 in the making. And key targets are $1.91 and $1.72. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 and regular updates about stocks, check out our stocks and S&P 500 service. You can find the links in the description. Thanks a lot for watching. Bye-bye.